Hey guys, welcome back to the channel. So today I want to talk about the new 13F filings that a lot of super investors, those who manage over $100 million of other people's money, have reported. And I want to look at a few of them to see any major changes, what their investments look like, if they made any drastic moves, and just to glean any type of information for us retail investors to understand so that we can make informed decisions in the stock market. So with that, let's get into it. So the first super investor that we're going to look at is Warren Buffett with Berkshire Hathaway. And Warren Buffett hasn't really done much. He's still holding a huge cash reserve of a few $100 billion, and everybody is wondering what he's going to do with that money. So far, it's been relatively quiet, and he's only reduced a few positions. He's added percent-wise to Constellation Brands and Domino's, Pool, and things like that. But these companies, it's a much smaller position of the overall portfolio. So I would say that Warren Buffett hasn't really done much for the last quarter, and he's still maybe anticipating some type of downturn in the markets, which very well could be the case. Still could be a recession. No one can tell the future. But it is interesting that he's holding that cash pile. Also, it's important to note that he is retiring at the end of this year. And so that may cloud some of this decision of holding that cash. It might be for another reason. It might not be for some type of downturn or waiting for better value in stocks in the market. So let's move on to the next one. The next investor that I want to look at is Bill Ackman and his Pershing Square Group. So for one, he holds about $11-12 billion in managed funds. So it's important to look at just due to the sheer size of his portfolio. But another reason I like looking at him is because he likes to concentrate his stock holdings into a few names rather than have like a portfolio of 100 different stocks, which is hard to track. So one, it's easier for me to do analysis on the ones that he does concentrate into, but also he does have a good track record at times. So here you can see that the most notable thing is that he opened up a position into Uber, which is interesting. Uber is in a good spot right now. Its business is thriving. Its revenues are growing. It is very exciting with Uber right now, and it's interesting that Bill Ackman started a large concentrated position, as is his style. Actually, it's about 18.5% of his portfolio according to Dataroma, and it is a new position. So that was interesting. Other than that, he reduced Chipotle. So I'm wondering if this has anything to do with the CEO leaving last year to go to Starbucks, or maybe he doesn't see much growth left in it or for the recent future. So I'm wondering what that entails. But he also reduced a couple other things. He reduced Google Class C shares, which are the non-voting shares, and increased Google, which are the voting shares. So he might just be repositioning himself to be able to have a greater share of the vote in future proxy meetings and stuff like that. And then he reduced Hilton Worldwide Holdings almost 50%. So that's a big drop in that, although it's a smaller portion relative to the rest of his holdings. So, and also Hertz. I think he increased in Hertz, but that's a very, very small position of his overall portfolio. But yeah, I like looking at Bill Ackman's portfolio just because he concentrates his holdings. It's kind of like what I'm doing with the public portfolio. So I like to see what he's getting into. But it looks like Uber and a few other stocks and maybe some repositioning of his assets in his portfolio. Now, for a really interesting one, we are looking at Michael Burry, who successfully predicted the 2008 crash. That's his claim to fame. So we're looking at his Scion Asset Management Group, and here he has about, in this portfolio only $13.2 million. And what's interesting about this, and why I'm pointing this portfolio out, is that he sold out of everything and bought one stock, which is Estee Lauder, as 100% of his portfolio. So he bought 200 shares, which is valued at 13.2 million, like I said. And all I can say is he sold out of his Chinese holdings, Baba, everything. I'm not sure what to make of this action, but he might think there's a huge downturn coming, and Estee Lauder is the only company that can withstand that because they have a diversified brand of companies under them. I mean, it could be just as simple as that, or it could be that he's repositioning himself. He has cash, and we're gonna have to wait till the next 13F filing to see what his new portfolio looks like and what he's repositioning into. But we just don't have that, transparency right now. So this one is kind of like a contrarian view of the markets, if you were to take it face value. Here is Terry Smith's portfolio, his 13F filing. And he is another one that, even though he has a lot more stocks, he still does concentrate into his stocks, but he tries to find, durable moats, companies with durable moats that can withstand a long, recession or downturn in the market. And these companies are basically compounders over long periods of time, many years. It's interesting that his primary holding is Meta, which is also our public portfolio primary holding. But he was reducing it, and he reduced several other, software and tech companies as well. Actually, the top several of his companies he reduced. So maybe he is stacking up some cash, like Warren Buffett, to withstand a recession or like a market downturn, or just keep in mind the market volatility for the past few months, just being more careful. He did increase to a couple of holdings, Texas Instruments, Sodas. He bought into it, which is interesting, but it's basically 0.5% of his whole portfolio. So just like a tracker position, really. And tracker positions are just positions you start with very small percentage of your actual portfolio worth, just to get a skin in the game, basically. So the next super investor we're going to talk about is Monish Pabrai, and he is a very interesting super investor. I like to follow him. He's one of the first super investors that I followed. The reason being is most of his money is out of the country. It's in places like Turkey and other places like that, foreign investments, and where he does airports and logistics companies and bottling services and stuff like this. But a small portion of his worth is dedicated to stocks inside the US. And so it's interesting to look at what companies he invests that are US companies. And his number one primary holding is HCC, which is Warrior Met Coal, which, as you know, like from my blog, I've written very highly about. I've analyzed the company. I believe this company could be a multi-bagger in the future, in future years, for various reasons. New mine, their free cash flow is going to explode in the next couple of years, and this is at a time where coal, metallurgical coal, prices are depressed, just because the global demand and supply is high. So when those factors, those headwinds turn into tailwinds, because supply will go down as this coal is being used, and demand will pick up from other countries like India, even to offset demand in China and stuff like that, the coal prices will rebound. And at a time where Warrior Met Coal's scaling and production will ramp up, is a recipe for a free cash flow explosion compared to their market cap. So I think it's going to be a multi-bagger. And so it's interesting to see that Monish has increased that position, added another 5.57% to an already a large holding. So he has almost 1.8 million shares of it at an average cost of $47.72, worth almost 90 million, almost 86 million dollars. So it adds another layer of conviction to my play in the public portfolio, with Warrior Met Coal being something that I want to keep getting into and growing, adding more shares as it stays under $50. So I'm very excited about that. In addition, he added to 2 energy companies. I'm not really familiar with these energy companies, but I can do some analysis on them in later videos or a blog post or something like that. He added to Valaris, or he bought into Valaris and Noble Corp. So these are new positions for him. And another interesting thing is he reduced AMR, which is another met coal producer. So he really does believe that HCC might be the better option between the two. The last super investor I'm going to look at today, even though there's several that have reported their 13F filings already, the last one I'm going to look at is Chris Hone from TCI Fund Management. And a couple of reasons I'm looking at him is his portfolio value is almost 44 or $43 billion, which is huge. And also his investing style is, concentrated holdings, holding for long term, finding compounding machines, stuff like that. So his portfolio, not too much interesting stuff, but he did add to GE Aerospace and Microsoft. So he's playing big tech, big AI tech, and aerospace industry. He did small reductions in Moody's and Visa, and both of those companies I think are amazing companies, compounders. And if I wasn't so heavily invested into mega cap tech and my play in Warrior Met Coal, I would be buying Moody's, Intuit, things like this big compounding machines. So I should probably make a blog post about that too. Non-mega cap tech companies that are compounding machines that are good investments. But yeah, other than that, it trails off after that. His other holdings are less and less of percentage of the relative percentages of the big total portfolio. So he did reduce Google, but even though that was already a small portion of his portfolio, he did reduce it by 32%. And I think all investors are kind of split with Google. And my own feeling about Google is that it is a amazing play, super undervalued. Its intrinsic value is much higher than the actual stock price right now. And I think it's just going to be a matter of time before it goes upward with all the things that they have, YouTube, Google One, and all the things they introduced at Google I/O yesterday. It was just simply amazing with all the integrations with AI and their search. The biggest issue that critics have with Google is their search advertising going to be crushed because of AI. I think they have completely answered that question with how they're integrating Gemini 2.5 and all their other models into, search with AI mode, and just the Gemini 2.5 prompting window and software is amazing. So I think they're answering that and turning into a subscription model. So yeah, I'm not really sure if I agree with his reduction of Google, but I think that's why several major investors are split into different camps about Google. So these 6 super investors resonated with me for various reasons, obviously. Some of them included, concentrated holdings and small amounts of stocks to track and things like that, and focus on quality companies with durable moats that are compounding machines. So these type of traits are what I kind of look for in my public portfolio in order to make long-term gains. Remember that these 13Fs are backwards looking. They may not reflect what the current holdings of each super investor actually are at the current time. So you always have to take everything with a grain of salt, and make sure that you do your due diligence and research when, putting your money into certain investments. Which leads me into making sure that I mention that all of the stocks and companies that I mentioned in this video are for information purposes only. I'm not recommending or advocating for any one single company or companies to invest in. So always do your own research and due diligence when investing. As always, these videos take time to make, and I would really appreciate it if you liked and subscribed to this video and added your own thoughts below. See you guys in the next one.